Can you survive on just 10,000 Kenya shillings in Nairobi, Kenya? Yes, the question is, can you survive on just $100 a month in Nairobi, Kenya? I know some of you are nodding saying, yes, it's very possible. And also, a good number of you are actually in shock, wondering how can someone survive on 10,000 Kenya shillings in Nairobi, Kenya, and yet their rent is even more than twice that amount. That's what I'm going to be discussing in this video. Essentially, how someone needs to develop discipline around money so as to be able to better their life in the near future, right? You are all much welcome to my channel. My name is Afagza Sifunam. And as I've stated, this 10,000 Kenya shilling is a hypothetical figure, just illustrating to you that yes, it is possible for someone to survive on lesser amount than they are used to in Nairobi or even in other city out there in the world. It all comes down to financial discipline, because at the end of the day, guys, someone becomes rich or someone makes wealth because of understanding of how money flows, right? And money doesn't really flow optimally by you working very hard, spending all the hours of the day, all the hours of your weekend, working very hard to get money so that you can spend the entire money. No. I'm going to illustrate to you. Actually, money flows in four mechanisms. Understanding how incomes are actually incoming and also their setup, right? How these incomes inform expenses, because all of us have expenses out there. Whether you are super rich, whether you are poor, we all have expenses, more so in Nairobi. Expenses relating to food, transport, rent, and so forth. Also, the understanding how money flows to liabilities. You know, there's some things which people do out there which are actually liabilities unnecessary, and at the end of the day, they cause them to be trapped in a debt cycle, whereby they get money, they sort their expenses, they sort their liabilities back to zero. Get money, sort expenses, sort liabilities back to zero. And then at the very end, we're going to look at how money can flow towards asset. And when I'm talking about asset, people out there may be thinking, wow, I have little amount of money, how can I afford assets? Not really. Regardless of talking about which amount of money you have, you can still be an asset owner, because there are myriad of assets out there, ranging from the very huge assets you're thinking about, for example, owning real estate, buildings, and so forth, okay? Even, for example, owning large tracts of lands, you know, someone owning a factory with very huge machinery, but also that those kind of assets which allow you to own just a fraction of a bigger asset. For example, in the stock market, you know, these are some of the areas where someone can invest their money in, be asset holders, and hopefully continue informing how their income continue increasing over time. And it is very important for people to understand that. And that's so because I think most people out there are actually broke, not because they don't get money. It's actually because they don't understand the flow of money. They don't understand how to make money work for them in the long term, right? To give you an example, yes, it's possible for someone to survive on 10,000 Kenya shillings in Nairobi, whether they're earning 10,000, 20,000, 50,000, 100,000, or even 500,000 Kenya shillings per month. And this is so because with wise decisions, someone can be able to invest in different assets out there. And just to give you an example, in Nairobi, someone could dive into stocks, for example, country-specific stocks, through opening CDC accounts and then investing part of their money in the Nairobi Stock Exchange, which has different company stocks out there, you know, ranging from commercial and service sector, ranging from manufacturing, ranging from telecommunication, and so forth. Someone can, for example, go out there, buy shares of, for example, Safaricom, right? Buy shares of, for example, Home Afrique, buy shares of, for example, Kakuzi, buy shares of, for example, name it, any bank out there. And in the process, depending on the declaration of dividends annually, you're going to be able to be getting dividends. In essence, a company sharing part of their profit with shareholders. And mind you, your investment is going to be intact. And beyond that, you're going to be getting dividends annually, which, by the way, you're going to have the freedom of whether to cash out this dividend for your own use, or even to employ the concept of compounding, whereby you can actually continue retaining your dividends over your stocks, within your stocks, so that your stock portfolio can continue growing and growing in value over time, right? Another alternative, someone can start even, for example, start purchasing a piece of land as prime using installment. And the good thing is that the real estate sector in Kenya is quite advanced. You know, there is mechanism of buying pieces of lands through installments, okay? The traditional concept called hire purchase. In essence, instead of you, for example, getting 2 million Kenya shillings to go and buy a quarter a piece of land or even an eighth lot of land at once, you could even find sellers out there who are willing for you to be just depositing, for example, 100,000 Kenya shillings for the next 24 months. And you're gonna own a property worth 2 point something million, right? These are options out there. And yet also in the same city, we have individuals, for example, earning 500,000 Kenya shillings per month, you know, who at the end of the month don't have any money at all. So it is very important to understand also you could use different purchase mechanisms out there. Like for example, the hire purchase concept for you to be able to acquire an asset by paying slowly or even just acquiring a fraction of an asset. And another last option for you to acquire an asset is actually by starting a business. And the good thing with starting a business, unlike purchasing, for example, real estate or even investing in the stock market, you have the flexibility to decide to what extent you want to open a business or to delve into a business. It is upon you to decide whether you want to open a small business, you want to open a medium business, you want to open a large scale business. And the good thing is that in Nairobi, in case you have any idea, you get a location, whether you're operating it remotely or even getting a physical location, you could comfortably start any business in Nairobi. I mean, you can start a business in Nairobi with even as little as 10,000 Kenya shillings per month. You know, you can invest 10,000 start a business or even invest 5 million start a business. So the decision is up to you to see how you can delve into starting a business. And the good thing is that if you start a business, you're gonna ultimately be able to complement your income because you're bound to have profit coming in from your business. And over time, as your business grows, also your income grows because you're gonna be getting more and more profit. So that's the other way someone can increase their income in Nairobi and actually be able to survive just at the base of it on 10,000 Kenya shillings only per year, per month, but also other sources coming in to complement how they survive in the city, right? And now let's talk about liabilities. Of course, expenses are straightforward. The only thing you need to do to handle your expenses well is to ensure you have a budget and also limit impromptu purchases which are unnecessary. And that's so because you can't be living like a king, yet your salary is that of an average person. That's the basic way of handling expenses. And now on to liability, which many people don't really have a concept of. A liability is actually that thing which you engage in or that thing which you do which ultimately draws on your cash flows. For example, if you go and buy a personal car, you know, at hire purchase, for example, you know, using a loan to buy a personal car, actually you're getting into a liability. And I'm saying so because you're gonna have gotten a physical asset which is not really generating you income. In essence, this is actually a liability because it's gonna mean each and every month you have to get some amount of money to put into that thing, yet it's not returning any money for you. So things like jumping on mortgage without being clear with regards to how you're gonna pay, you know, getting a car just to impress your peers without being clear with regards to how you're gonna pay for it or even if you can afford it in the first place. You know, for things like, for example, getting credit cards and actually going out there to max them out without being clear with regards to how you're gonna finance them. You know, things like, for example, getting in short-term debts and loans and so forth. All these are actually liabilities, which by all means we need to actually see how we can avoid them. Because at the end of the day, if someone's money comes in, based on their expenses, the remainder goes to liabilities, someone's going to be trapped in that quote-unquote debt cycle. In that, they won't be able to have spare amount of money for them to be able to invest in assets. And if that's the case, chances are they're going to continue being in the rat race, working very hard, working part-time, working extra hours, chasing the elusive financial freedom goal. And yet, it is unnecessary expenses and liabilities which are trapping them in this consistent and perpetual debt cycle. So ensure you keep your expenses and liabilities in check for you to be able to spare any amount of money to invest in assets out there. What do you think? Do you think you can survive on a low amount of money in Nairobi? And if yes, have you done this before?